Hi folks, I just want to go through a couple of things on natural gas and in response to one of our community members, Albert. So let's have a look at it. And first of all, I just want to go through this chat we've just had a few seconds ago in the members room. I'll just start over here. Sanjay said US nat gas exports are currently at all-time highs and at capacity, no more LNG to export. Piotr says Europe's fully loaded and we've got warm weather coming up. And my response was, yes, it's fully loaded, but that's when orders get placed for the next load, sometimes months and years in advance. Also, currency fluctuations, we've got the FOMC today, are super important for consideration in terms of forward pricing and orders. And Russia and Ukraine, plus now Yemen, pose a perhaps not to be realized threat on supply and transport. A couple of other comments. And I said, put yourself in the shoes of a purchasing manager for, and I just made all of this up, British Gas or New York Utilities. How would you go about your job? And that in the context of looking at the March natural gas quotes, and there you can see currently at $2.14. Now, I wonder if you were a purchasing manager at a big facility or government organization and we were looking to purchase natural gas, what do you think of the pricing for the March contract at $2.14 or even April and May at $2.20, and then going up in June to $2.37? I think I'll be looking to repurchase at these levels and start to look to place orders to replenish the natural gas that will be drawn off during the winter. I also put up two charts for the March contract, the shorter term chart, then the longer term chart. Let's have a look at the short term chart. Steep downward trend line, oversold, massive increase in volume. Volume spiked towards the end and definitely oversold and reaching down towards that $2 level. I also put up a longer term chart of the March contract. Let's have a look at that. And what's interesting on this longer term chart is these red arrows. Whenever you see a volume spike, and in fact we're at the highest volume that we've been at since 2021 right now. Whenever you see a volume spike, you see a turning point in the market. We're currently trading at the highest volume since 2021. Every time we reach this sort of volume level, we get a turning point in the market. And then just one comment I made here, 47% of natural gas is used for residential heating. That leaves 53% for industry and transport. Of the 47%, demand fluctuation accounts for only a portion of the price fluctuation, let's say 30%. And that's a thumbs up, I have to admit. It could be as much as 60 or 70%, or it could be 10%. I really don't know. That means 30% times 47% equals 14% of the price can be accounted for by heating demand variations, leaving 86% dependent on other factors from the supply side and the elephant in the room, industrial demand. Now, for Albert's sake, and I've already sort of alluded to this very briefly, the reason I'm not hedging natural gas at these levels is because we are at a critical low. We're at the channel bottom. We are below the 618% fib. I'm going to switch this to a day chart. There's the 618 fib, which unfortunately we've broken down through, but only to the bottom of the channel. Definitely wouldn't want to be selling here or hedging, so I've opted to keep my position unhedged, and I'm looking for any dips down towards 2 and perhaps even slightly lower as opportunities to buy. The reason I'm able to do this is because I have a relatively small position. I've got a fixed risk on this trade, which is generally around 1 to 2%. Currently, I have a risk of about 1% on this trade if we drop below $2, but I'm willing to add to that risk and raise it maybe to my maximum of about 2% if we drop down to that level at around $2. As I said, this is a relatively small position because I've got trades on in VIXY, London Cocoa Futures, Euro, Gold, US dollar, Japanese yen, and a couple of other minor trades. So the natural gas position makes up a smaller proportion of my overall portfolio than it normally does, allowing me a bit of leeway to hold on to this position and even add to it if I need to a little bit lower down. I still think we may try to hold this channel bottom where we are at the moment. If I just zoom this out a bit, you can see this whole area here where we are at the moment is quite a messy consolidative sort of zone, and there are no real clear levels in here, just a lot of chopping and thrashing around. So we're right into that zone right now. And remember, that zone and the zone that we're at now was pivotal in this launch from just below $2 up into this uptrend that we've experienced during the year. So although we don't have very clearly defined lines of support and resistance, it's definitely a super interesting and super key area to trade from. Combined with the channel bottom and the oversold RSI indicator, you can see we're as oversold as we were after this massive drop down from around $10 to about $2. That's that period with a very, very low RSI, and we've returned to that now for the first time since then. So it's a really key time for natural gas, incredibly oversold stochastic, lowest it's been since the last drop. We're at the channel bottom. We've entered this consolidation and messy trading zone. And on the 4-hour chart, we're just trying to form a reversal candle now as I speak. And we've actually got RSI divergence on the 4-hour chart too. Notice that we've got a lower low here in the last number of hours, but the RSI has not made a lower low. In fact, it's made a higher low. Well, I hope that gives you a bit more insight into the way I'm thinking. Good luck with natural gas, and I'll speak to you soon.